Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as you know, the semiconductor companies have different sectors within that sector. And in today's video, we're going to focus on one company in the equipment side of things. We talked about ASML recently, and today we're going to talk about Lam Research. This is the company we're going to talk about today. And as you can see here, a year to date, all the companies, these companies are in that sector, okay, or within subsector if you like. Lam Research is the one that is basically down, as well as of course ASML. We've talked about ASML. Today we're going to talk about Lam Research. Now, Applied Materials, we've talked about recently as well, is actually up about 14%, which is not bad. And KLA is about 13%, again, which is not bad. It's not the S&P 500, because if we compare this with the S&P 500, so if we go for SPY, for example, okay, the S&P 500, what you will notice is the S&P 500 year to date is actually up about 26%. So these companies are not doing as well as they should be doing. But when you think about it, there are other sectors, there are other companies within the semiconductor, for example, and Broadcom, for example, that's up about 15%. Okay, and if we add Nvidia, for example, is up over 200% since the beginning of the year, which is absolutely ridiculous, right? But again, we can't expect it in Nvidia because of all the whole AI hype and everything else that's around it. So we'll see how that goes. But Lam Research, like I said, is basically does all this the equipment side of things. And they've talked about in their latest earnings, of course, the key word here being AI, because of the AI trend, basically transformation and what's happening in the AI. They are in a very good place. Okay, they do basically design those chips. So they have the equipment basically that we use to basically to do these NAND chips. Okay, enable technologies critical for performance and cost scaling. They've got the DRAM or dynamic RAM. They help those foundry companies and so on. And as you can see, one of the things I wanted to show you quickly is how diversified their revenue is. So the revenue by region is, I didn't even know, 42% of their revenue actually comes from China, which is very, very interesting. So this company, although is great company and so on, I'm a little bit concerned if basically what is happening right now because of Donald Trump taking over and the tariffs start, and if he continues doing what he's done while basically the first term, then potentially this company will be going down a lot. So we'll see what happens. But as you can see, these are the different regions. So you've got the Korea, for example, you got Japan, Taiwan, and because of Taiwan Semiconductor, you got the US, which is very, very small. I didn't think it was that small. Okay, and then we've got the rest of the world. So yeah, so we'll see what happens with this situation, but I just wanted to highlight this because I was going through this and I was like, okay, I need to stop here. What is this big junk? I was hoping that will probably be, I don't know, somewhere in the US, and basically but it's not. It's actually China, so it'll be interesting to see how it goes. So yeah, let's now have a look at the financials for this company, and then we'll take it from there. So as always, the first thing I'm going to basically look at is the revenue side of things, and I'm going to use the Snowball Analytics. This is a new software that I've been using lately. I've got paid a subscription, so if you're interested, the link's on the description. It's actually quite helpful in terms of information wise. You can get information about summary information about dividends, so like the percentage of how much basically the company, what percentage of their dividend is, the annual payout, the next payment. You also got the basically how reliable that dividend is for the 5-year growth rate, how much they've been paying, all of that, the payout history, which is quite nice to see. It looks like it is increasing for this company, but because they also are increasing that dividend as well. But yeah, the first part, I like the graphs, by the way. That's the bit that I'm really happy with this. Okay, so if we look at the income statement, okay, and we're looking at the revenue side of things, one thing you will notice is 2015, since 2015 has been going up. And then 2021, where there was a massive jump. 2022 is actually great. 2023 was really good. And then 2024 and 2025, or trailing 12 months, as you can see, we have a bit of a decline. And guess what? This is very, very normal for this type of companies because they're very cyclical businesses. A couple of things I want to look at: the balance sheet. I want to look at the current assets. Okay, so total current assets, we're looking about. If we look at basically 2024, we're looking about $12.8 billion, which is important. And if we look at that against the current liabilities, okay, so total current liabilities, which is this part here, total current liabilities, which is about $4 billion. So they have enough to cover, okay, the current liabilities, which is quite nice. Okay, now we're going to look at the rest of the informations, and then we will look at the valuation side of things, and then we'll compare this with the entire S&P 500 and those 5 companies that we looked at, 4 companies we looked at early, and see how much these companies are up in the last 5 to 10 years in terms of total return. So as you can see, currently trading $37 per share, EPS is just over $3, 94 billion market cap. It has a wide economic moat, and beta is slightly high. Now, when it comes to current PE, we're looking about 23. The sector medium is about 25 right now. The forward PE is about 20, and the 5-year average about 21. So it slightly seems a bit expensive in comparison to historically where the company has been, but in terms of sector medium is actually slightly lower. The dividend yield 1.3, we've seen that already. The payout ratio about 26%. The annual payout, we're looking about just below $1, and the 5-year growth rate, we're looking about almost a 14%, which is quite nice. They have increased that dividend for the last 4 years, and according to Seeking Alpha, is a dividend safety B+. Now we've seen it here. Okay, if we go back here, it was reliable, so 84% it is reliable, which is quite nice to see. And the free cash flow here, looking about $4.8 billion, and free cash flow for the last 5-year compound annual growth rate for the last 5 years about 13%. Free cash flow yield of over 5%, which is nice. Now, profit margin, return on equity, and operating margins are really good. Return on invested capital to 33%, and net income compound annual growth rate for the last 5 years, we're looking about 14%. Total return the last 10 years, we're looking about 26%. Revenue growth for the last 10 years, we're looking about 5 years, we're looking about 10%. And the EPS growth for the last 5 years, we're looking about 13%, which is really good. Again, current ratio, we're looking at over 2%. We've already seen the current liability against current assets, so that's really good. So 2.5. Normally, we're looking at anything above 1. In terms of revenue growth for the next year, we expect 2026, because they've already just reported, I think 2020, end of 2024, 25, or starting 25. But 2026, we're looking at about 13%, and EPS growth of next year as well, we're looking at about 19%. Now, according to Morningstar valuation, it's $83 per share is the fair value right now. Right now, it's about $10 above, below that. Target, Morningstar says is fairly valued. 75 when it comes to simply Wall Street, again closer to where it is right now, so about 6% over. And the tip rank is actually saying $97 per share. That's 33% upside from where we are. It's a moderate buy. Seeking Alpha also $93 per share, about 29% or whatever it is. And then Seeking Alpha is actually also saying a buy. Now, when it comes to Sharia compliance side of things, no issues whatsoever. And as you can see, their ordinary shares number has been declining. So basically for the last 4 years, 1.4, then 1.3, and then 1.3, and right now 1.3 again. So as you can see, it's slowly declining. So they are buying back their own shares, which is quite nice to see. And what we're going to do now is compare it with the S&P 500 in terms of total return, as well as the basically similar companies in the similar sector. So this is the company right now we're looking at. For the 1 year, it's only about 2%. But when we look at it for the 3 years, okay, when this loads up, what you will see is about 17% for the 3 years, 27% for the S&P 500. So it has underperformed. Okay, sorry, it has underperformed the S&P 500. KLA is actually performed absolutely amazing. That's 60%, and AMA or Applied Material is about 22%. ASML is down about 16% over the last 3 years. And in terms of total return, the 5-year growth rate for the 5 years total return, total return, we're looking at about 197. Basically 91% for the S&P 500, so it has beaten the S&P 500, but it's slightly lower than the rest of the peers apart from ASML. To be honest, the other two are very much competitors for this company, not so much for ASML. 10 years, we're looking about 905%. The S&P 500 only 180, 988. So again, basically similar in terms of total return of the last 10 years. AMA or Applied Materials, you can see, is actually slightly lower. And of course, ASML is actually on the 583. So in terms of basically total return in the last 10 years, this company has done an absolutely amazing job. Again, this kind of gives us an idea. It doesn't actually tell us what's going to happen in the future, but it tells us, this is where the company has been. Potentially, if it kind of repeats the same thing over the next 10 years, if you buy it today, in 10 years time, you will be up 900 basically. But of course, that's not what we're saying here, but it just kind of gives, like I said, it gives us an idea. couple of more things and we're going to wrap up the video. But before we do that, before I talk about the valuations, please, if you can join us the Patreon account, it will be absolutely amazing, because it gives you a lot of things, access to a lot of things included in Discord, includes all the buys and sells regularly. Basically there's about now 20 different companies that are undervalued that I've shared with the community recently. I'm regularly updating, currently updating the watch list as well, and there's ETF trackers. There's a lot of things that you can get your hands on, inshallah. So let me know if you're interested. Of course, you just join us and just clicking the link, inshallah. And the final thing we're going to look at is the valuation. So Morningstar said about $83 per share. Simply Wall Street is about $75 per share. Seeking Alpha 93. Multiples valuation model that I used was a 92. Discounted cash flow model was a 94. Average all of that out, you get about $87 per share. Right now, the current stock is basically his current price is $72 per share. That's about 20% basically upside from where we are right now, which is quite nice. So if you wanted, of course, if you're looking for that 15% or 10%, whichever you're interested, you used to basically can buy right now this stock for about $72 to $74 per share, and it does actually seem undervalued. Now, I don't think I would be adding this company to this portfolio. Maybe the other portfolio, I might look into it. And the reason for that is because I do own a couple of companies, including ASML, Qualcomm, Broadcom, and so on. So there's quite a lot of big tech companies in there, semiconductor companies in there. So I don't want to overload that. It's not a good idea to own basically as one sector so much. And quickly, just to show you what I'm talking about here, when it comes to the sector breakdown, information technology right now is my biggest one, and as you can see here, I've got these companies in there. So Broadcom, again, Qualcomm and ASML, all of these companies are in the semiconductor side of things, and for that reason I probably would not be adding to the portfolio anytime soon, but potentially into the family portfolio. So if I'll let you know, inshallah, if I end up doing that. As you can see, the entire portfolio is actually doing really well. I'm £116,000 right now, and I've got about £250 to spend today. So I'll let you know exactly what I invest on that. If I get a chance today, if I don't get a chance today, basically I'll probably be buying on Monday morning, but I'll let you know. And as you can see here, for the 1 week, that's basically the portfolio is up closer to £2,000, which is basically 1.4%. if this data is correct from what is it called, trading 212. Anyway, I'm going to stop the video here. I hope you enjoyed this type of content. If you are, please don't forget to join us in the Patreon account, where it actually gives you access to a lot of things, and it helps us pay for a lot of the subscriptions that we use here. A lot of this information are not free for everybody, so I basically pay for this subscription so we can actually benefit from, inshallah. Anyway, I'm going to stop the video here. Have a wonderful day. Assalamu Alaikum.